Hello viewers, welcome to my channel Sensor 360 Investor, where we leverage best practices from the business world around the globe to apply them to the investor process. Investing has many facets. Here we incorporated 360 view across them to create, grow, manage our wealth. In this video, we will focus on indexes. And today we'll cover markets. We'll look at the sectors. ETF leadership, we'll take a look at country ETFs, and then we'll wrap up with looking at the index models and what they're telling us in terms of whether we should be invested or divested. Before we begin, a quick word on the disclaimer. Remember that this is not financial advice. Please pause, read, and then continue. Okay, so without further ado, let's start the show. Here we have the US markets overall. So we can see that the Dow Jones has been kind of leading the run of late from the bottom down here earlier in October. We've had a nice little run, but it's started to pull back in and then lagging. And we can also see that the VIX has, just as I mentioned before, there's just no sign of fear at this stage in the markets. And in fact, the VIX has been coming off, so kind of adding to the fact that there's more bullishness that's been occurring, especially since with the markets being going up. Oil kind of came back, pulled in and bounced again. Yields pulled into support levels as indicated last time, and they've held. And obviously with today's Fed action with another 0.75 rate hike, this is gonna move up, and as that moves up, market should draw in, even though some of that was probably baked in. And then if we look at the dollar's re-strengthened again, which will impact the earnings of the multinationals, international companies, but may be favorable for those that are more domestically based. And then gold, it just hasn't done anything of note, and tech-heavy Nasdaq is suffering and continues to suffer. Then if we look at US markets in particular, so we've already covered some of the indexes, but here we can see mid caps, not really a lot of strength in the mid caps. The Nasdaq, as we notice, is suffering the most, and then the benchmark spiders not too far ahead of that. Utilities are still kind of not performing, so the flight to safety isn't really coming into utilities, which kind of suggests money is seeking the high yields. Quick look at the sectors, and we can see that pretty much only energy has been driving the markets, and every other sector has just not participated. Finance has picked up a little bit, so this might be one to watch. Certainly the relationship between how energy performs in the weeks ahead, and if finance starts to pick up, may give us an indication of some amount of rotation may start to occur. And then here is a different view of the sectors. This is a 2-month view. The prior one was 3-month view, and we can see energy leading the race, followed by financials. So both of these were positive on the prior chart. Then we have industrials, healthcare, staples. So very much a defensive look at the markets at this stage. And the growthier part of the sectors, technology, discretionaries, and communication services are all lagging at the bottom. Here's a new view, and this is the countries ETFs. So I'm only showing the top 5 because we don't need to look at the others. This is where the action is. So Mexico's kind of the strongest at the moment, followed by Brazil. Brazil's been a little choppy, but they have had elections, so this may start to become a little bit more orderly. And then we have India, a little pullback, and started to mount a little rally here. Italy's had a nice rally, probably again a little choppy here during their elections, and then as the elections become a certainty, head out it's actually had a nice little pop since then. And then France has also started to move up. So on the European front, we have Italy and France taking the charge, and then we have on the BRICS front, we have Brazil, India, and then leading the pack is Mexico. Okay, so what does this all mean in terms of our investment models? So from 401k perspective, the model is indicating stay in cash. And then for our long-term retirement portfolio, again, it's kind of indicating that we should be in cash. And then our more intermediate level long-term portfolio, it's also indicating staying in cash. So basically, keep building the dry powder and stay out of a downtrend bear market's harm way. Okay, so that wraps it up for this video on indexes. We are still locked into this downtrend within this bear market, trying to find the bottom, even though there may be some bottoms along the way. Please do read the disclaimer. I'll give you a few seconds while you do that before we close out with final thoughts. Okay, so that wraps it up for this video. Thank you for watching and listening. I'll see you in the next video. Until then, goodbye.